Welcome everyone. Today, Sinead and I will present to you the 2023 fourth quarter and full year results. We had another year of very strong performance, delivering the second highest cash flow from operations in Shell's history, despite the external uncertainty and volatility. Starting with safety, which remains our top priority. Our personal safety results last year were slightly lower than in 2022, and our teams are determined to make sure 2024 is a year of improvement. I am, however, really pleased that our process safety results set a new record for Shell, confirming our top-tier performance in the industry. We are also making good progress across the targets outlined at our Capital Markets Day and expect more to come as we progress through 2024 and beyond. In 2023, we demonstrated our strong commitment to capital discipline by delivering at the lower end of our $23 to $27 billion range. In addition, we have already achieved $1 billion in structural cost reductions, well on our way to a reduction of $2 to $3 billion by the end of 2025. This reduction is a first step. This is not a one-off change program. We are building the capability to continuously adapt to changes through the energy transition. The reductions will be staggered. The most significant contribution in the short term comes from focusing on where we play, which are essentially portfolio choices. And at the same time, we are emphasizing a bottom-up focus to create a leaner, more agile organization that delivers more value. We are also leveraging new technologies, such as artificial intelligence, to improve the performance of our assets. We have millions of sensors, collecting over 5 trillion rows of data that our AI models, combined with our conventional models, use to monitor equipment 24 hours a day, 7 days a week, alerting engineers to anomalies from a distance. This enables us to intervene and fix issues early, improving our performance. And we continue to high-grade our portfolio and position the company for growth into the future. This past month, we agreed to sell our Nigerian onshore subsidiary, SPDC, subject to government approvals and other conditions. This is an important step for the company, and we hope to complete the deal as soon as is possible. In 2023, we saw production growth with the startup of a number of key new projects in our advantaged upstream business. The projects, which came on stream this past year, at their peak, will add over 200,000 barrels of oil equivalent a day. They are part of our larger funnel set for startup by 2025. Together at their peak, all projects will add more than 500,000 barrels of oil equivalent a day to our production. And they will enable us to continue providing the energy security that the world needs while delivering cash flow longevity into the future. We also continue to invest to help enable the energy transition in areas where we can create value. Last year, we invested $5.6 billion in low-carbon energy, such as our Nature Energy acquisition and the Crosswind JV, which will supply renewable power to Holland Hydrogen 1, Europe's largest electrolyzer. In short, we're working hard to deliver the energy the world needs today, and we're helping to build the energy system of the future. Our relentless focus on performance, discipline, and simplification allowed us to deliver compelling returns and create more value for our shareholders in 2023. Our shareholder distributions for the year were over 42% of our CFFO. And today, we increased our dividend by another 4%, taking our total increase over the last 12 months to around 20%. We continue to progress towards our destination of a net zero emissions business. Our preliminary results show that we have further reduced our Scope 1 and 2 emissions in 2023. We are only halfway through the timeline to our 2030 target, yet we have already achieved more than 60% of the reductions needed to reach the target. With that, let's go to Sinead for more financial results.
Thank you, Wael. We delivered strong results in Q4, driven by our strong trading and optimization in LNG and robust operational performance. One of this quarter's highlights came from QGC in Australia. This quarter, they had their highest ever LNG production, which helped deliver cargo number 1,000 since startup. Moving to our financial results. Our adjusted earnings were $7.3 billion for the quarter and $28.3 billion for the full year. In the fourth quarter, we saw $4 billion in post-tax impairments, driven by macro outlooks and portfolio choices, in line with what we announced at Capital Markets Day. We generated $12.6 billion of cash flow from operations, contributing to a total of $54.2 billion for the full year 2023, our second best year ever. Our strong performance allowed us to return $23 billion to our shareholders, delivering in excess of our 30 to 40% CFFO range. And today, we have announced a new $3.5 billion share buyback program, which we expect to complete by the time of our Q1 results announcement in May. We have also announced a dividend increase of 4% in line with our progressive dividend policy. Our balance sheet remains strong, with net debt reducing by $1.3 billion year on year. And looking forward in 2024, we will continue to target shareholder distributions of 30 to 40% of our cash flow from operations through the cycle, while maintaining our focus on delivering more value with less emissions. Now I will hand back to Wael for more on what's coming next.
Thank you, Sinead. So this was another year of strong results for Shell, marked by one of our highest ever annual adjusted earnings and cash flow from operations. We achieved this and much more, despite volatility in the energy markets. In 2024, we will focus on delivery of our first sprint through performance, discipline, and simplification, building on what we have achieved in 2023. By focusing on areas where we have differentiated capabilities and core competencies, we aim to be the investment case through the energy transition. In the coming weeks, we hope you can join us for our LNG Outlook and our annual ESG event, which will also cover the Energy Transition Strategy 2024 publication. Thank you.